Welcome to the Explainer. Today, we're diving straight into a totally fascinating corporate development that's making headlines. The Prudential and HCL Health Insurance joint venture finally getting its regulatory nod. You know, this really isn't just your standard corporate merger. It's a strategic alliance that's blending legacy finance with heavy-hitting tech infrastructure to tackle an absolutely crucial global sector, healthcare. So, let's just get right to it.
So how exactly does a legacy finance giant teaming up with a technology titan actually disrupt a massive healthcare market? We normally see companies in the exact same industry merging, right? Just to consolidate power. But here we have Prudential, an absolute towering name in life insurance, joining forces with HCL, a huge powerhouse in digital consulting. I mean, what really happens when you combine centuries-old underwriting expertise with bleeding-edge digital infrastructure? Well, let's find out.
Section 1. The green light. Zooming in on the headline.
Anytime you hear about a major insurance move in India, you're going to hear an acronym, the IRDAI. That stands for the Insurance Regulatory and Development Authority of India. Basically, they are the ultimate gatekeepers. You can't just suddenly decide to start selling insurance in India. You got to prove your financial stability and your operational integrity to them first. Getting their official stamp of approval is essentially the golden ticket.
And securing that golden ticket, it's a massive corporate undertaking. Step 1 is the joint venture formation. That's the boardroom handshakes, mapping out the shared vision, and locking in the capital commitments. Then step 2 is the regulatory application, which means submitting absolute mountains of documentation just to prove the new entity actually has the architecture to survive. And finally, we hit step 3, the huge milestone we're dissecting today, the official IRDAI Nod, which officially transitions this blueprint into a legally sanctioned reality.
Moving on to Section 2, Power Players Unite, Anatomy of a Deal.
This venture right here represents a pretty much perfect marriage of complementary strengths. On one side, you've got Prudential's legacy. They bring immense financial capital and incredibly rigorous risk assessment knowledge. Basically, they know exactly how to structure a policy so the math actually works. But today, a good financial product just isn't enough anymore, is it? You've got to deliver it seamlessly right to a smartphone. And that is exactly where HCL comes in. They bring world-class digital infrastructure and a really intricate understanding of the local market's digital habits. It's like one brings the fuel and the other builds the engine.
Section 3. The Market Landscape. Why India?
The gap between the currently insured population and the untapped market potential in India is absolutely staggering. We're looking at a population of over 1.4 billion people, yet the penetration rate for comprehensive health insurance remains incredibly low compared to global averages. It's just hovering in the low single digits. Because of this, a vast majority of healthcare expenses, roughly 50% in many regions, are still paid entirely out of pocket. For Prudential and HCL, that massive gap isn't just a challenge, it's literally a multi-billion-dollar blue ocean just waiting for a company that can deliver highly scalable, easy-to-understand insurance.
And the ambition driving this whole thing is perfectly captured by leadership's vision, to bridge that vast protection gap by seamlessly integrating robust financial security with next-generation technology. See, this isn't about fighting for the tiny slice of the pie that already exists. It's about using technology to aggressively grow the pie, reaching millions of people who were historically left out of the financial safety net simply because traditional policies were way too complex or just lacked digital accessibility.
Okay, Section 4, Impact on Consumers, the bottom line.
So, when a major tech giant helps build an insurance company completely from the ground up, the consumer wins through pure efficiency. First off, expect tech-driven, highly accessible policies. We're talking about buying and managing your health insurance entirely through super intuitive mobile apps. Second, streamlined digital claims processing. Imagine uploading a snapshot of a hospital bill and having AI-assisted software approve your claim in a matter of hours rather than weeks. Finally, this points to a much deeper integration, where your health data, your insurance, and your personal financial planning are seamlessly connected in one single ecosystem.
Which leaves us with an incredibly exciting thought to ponder. Will tech-first joint ventures become the new standard for global healthcare? Think about it. If Prudential and HCL can successfully use digital infrastructure to close that massive insurance gap in India, it's totally going to serve as a blueprint for the rest of the world. It really suggests a future where legacy financial institutions simply can't afford to operate in a vacuum anymore. They absolutely must fuse with tech innovators if they want to survive. I hope this explainer really helped you see the massive strategy behind today's headlines. Keep questioning, keep learning, and I'll catch you in the next explainer.